I expected the ETF launch to be successful, but I think it's quite impressive just how successful it's been. At this point, we can see that these ETFs are going to surpass gold ETFs in not too long a time. The Bitcoin ETFs are the most successful ETF launch in 30 years, and apparently in the first 30 days, they outperformed every other ETF. They've crawled to the top of 3,500 competitors in short order. And I think that they have sparked, the bull run and the upward movement in the price. I mean, definitely there's a huge amount of institutional capital flowing into Bitcoin right now that is driving the price because of asset scarcity. I think the most important thing, or the most important result of this is the ETFs themselves represent regulatory clarity for Bitcoin as the institutional grade crypto asset. I think that's a very important thing. I think secondarily, the ETFs represent an on-ramp for institutional money, and they open up a gateway between $100 trillion or more of institutional money and Bitcoin. We thought that maybe Bitcoin was a competitor to gold, but it's actually run up the leaderboard, and now it's starting to nip at the heels of the S&P 500 index ETFs. If you're looking for an analogy, imagine a business without a website. It was pools of money without an ETF ticker were mutual funds. So if we look at the history of investing, we kind of went from buy the stocks individually to trust a money manager with a mutual fund, and the mutual funds made Fidelity. And then 30 years later, the ETF came along, and it was a universal API that you could use to trade a mutual fund. So in the mutual fund world, it takes you a few days or a week or 2 weeks to set up an account, and it takes you a few days to move your money in the mutual fund, and you have to redeem your money, and it takes you a week to get your money out. And so it was a very slow, low frequency relationship, and the typical investor is going to just do business with one company like Fidelity. When the ETFs came along, you could have any stock trading app, and you could trade from one fund to another fund. You could trade, in and out of funds 6 times a day. You could every day say, well, I want to buy this thing from Fidelity, this thing from BlackRock, this thing from Vanguard. And you could put those funds in the same watch list as your Apple stock or your Google stock. So it's kind of the same impact the internet had, which is, there's a retail store, there's a restaurant, what's the website? Like, I want to say, let's go to a restaurant. You go check out the website. It says, this is where it is. This is how long it is. These are pictures of it. This is the menu of it. Now, imagine I tell you we're going to meet at a hotel or in a restaurant, and there is no website.
Yeah.
You're like, no. Your reaction is, well, you get on a plane and you fly there, and you walk through the door and you ask for the menu, and at that point they tell you what it is. You think, that just seems so 20th century. So, you're laughing, but you can't do business without a website. The website is a universal API of information. That ETF ticker is the financial API for an investor. And so that has been extraordinarily successful, but Bitcoin, it's like Bitcoin didn't have a website, right? Bitcoin didn't have a website for institutional investors, and about a month ago, Bitcoin all of a sudden became something. You type it into, your Bloomberg, you type it into your Robinhood app, or you type it into any stock, E-Trade or any stock trading app, instant information. You can buy, you can sell. And of course, those ETF tickers, they don't just give people, perfect awareness and ability to transact. That's also the global protocol for trading volatility or for issuing credit. So if I had a bunch of money in Bitcoin and I wanted to get a loan against it, it might take me a month or 2 months to find someone that'll give me a loan. Then I have to move to Bitcoin. Then I have to pay double the interest rate that's normal. And that's kind of scary. But after the ETF, people could have the same economic value in Bitcoin with JP Morgan or Merrill Lynch or Bank of America. And they could just say to this broker or banker they've been doing business with, like, I bought a house, I want a big mortgage on it, and I'm going to post a little bit of my Bitcoin as or securities as down payment against that mortgage, and I use it to get a mortgage, or I use it to get a margin loan, or maybe I could hedge against it. And so these ETFs opened up an entire financial world of awareness and opportunity and functionality to the 99% mainstream investors. And you really can't underestimate just how profoundly important that is to the entire network. I think that ETFs are just another application of Bitcoin, and there are thousands and thousands of applications coming. So in this particular case, 1% of Bitcoin, 1% more assets kind of flowed into the ETFs. It boosted the price of Bitcoin in the last 2 months by $20,000 a coin. And that means that 99% of the $200 billion of market cap got created. And something like 99.7% of the benefit was for the people that didn't own the ETF. If you think about it, yeah. And once you do the math, the ETF people bought in at 40,000 and drove the price to 60,000 and have 1%, and everybody else had the other 99% and their Bitcoin is worth 60,000. So in this particular case, if that's taking over Bitcoin by basically making all the people that don't use ETFs $200 billion richer, right? Then you probably want that to happen 100 more times. You'll see other apps. At some point, an insurance company will build Bitcoin into an insurance policy. And then companies will build Bitcoin into their balance sheet. If a country that you don't like buys 1% of the Bitcoin supply and drives up the price by a factor of 2, it'll be another example of every other country getting 99% of the benefit. So as people embrace the Bitcoin network, and as they build applications on it, and as they invest in it, it's impossible for them to take it over, because the network outside of the new actor is actually getting more powerful at a faster rate. And it actually empowered the non-ETF holders 100x more than it empowered the ETF holders. So it's not a fear I have. I think that every single new participant just makes the entire network better and more successful, and empowers every other type of Bitcoiner. I think the lesson of Bitcoin is the best asset. There is no second best asset. Buy Bitcoin. Keep buying Bitcoin. Don't sell the Bitcoin. Ignore the noise. If you would buy it because someone said it's a good idea, then you would sell it because someone said it was a bad idea, because you're not making your own decision. You're basically reacting to the crowd or sentiment or emotion. A lot of people make investments based upon a recommendation from somebody else. In the non-Bitcoin world, that's almost essential, because there's 10,000 stocks. Most people don't study. How many people spend 100 hours studying each of the S&P 500 stocks? Nobody. Okay, so if you own one of them, how many people spend 100 hours studying one stock that they own? 98% of people don't spend 100 hours studying the one stock. The stock analyst, the person that covers Apple, they spend 100 hours, and everybody else kind of outsources the thinking to that person. It says the analyst put a buy rating on it, so I'll go ahead and take their recommendation. I'll buy the stock. And when the analyst puts a sell rating on it, they sell the stock. And, that's understandable in the 20th century economy, because in a world where you have to sift through 100,000 different investment ideas to figure out what to buy and sell, you can't possibly do it. A dentist doesn't have the time to sift through 100,000 things. Okay, why do you have to sift through 100,000 different things in order to actually avoid losing all your money? And that's because the money's broken. Okay, so in a world where the money is broken, where there isn't a money, where you can just buy the money and wait forever and have it go up, in that world, you're an investor and you're running your own hedge fund. And of course, most people don't have the time to run their own hedge fund, so they're the worst of all worlds. They're taking the risk of a hedge fund, but they're not putting the effort in to run a hedge fund. And even if they did, I mean, how many 65-year-old retirees, have the ability to do stock analysis on 500 different stocks? Like, I would argue almost none of them. So in this particular case, Bitcoin is a new asset class. It's digital money. Once you understand it's digital money, and you probably get there somewhere between 100 hours and 1,000 hours. Once you understand it's digital money, then you realize that the strategy is you just buy it and keep buying it and don't sell it until you have to pay a medical bill or until it's an urgent life or death matter where you just have to sell it. But otherwise, you just keep accumulating and you wait for all of the chaos and entropy and inefficiency and disorder that undermines every other asset to take hold. The longer the time goes on, the more difficult and the more disorder there is, and the more people appreciate the value of good money. So I wasn't bothered by the volatility. I was just waiting, for nature to right itself. Mm-hmm. And I think that the biggest mistake you can make is become insecure. Is it money? Is it not money? Right? Once you've made your decision, you're committed, then you're just thinking if the price is low, that means I get to buy more.